Mortgage rates, first-time buyers, and market challenges. We're going to have a great conversation today.
Yes.
So what are your thoughts? I mean, you hear people in the news or journalists, and you talk to people on the street. They really think that Halifax is going to go belly up when all these mortgage rates are due because people have 1.7 and we're going to have all this inventory on the market. I don't think so. What are you seeing?
Yeah. So I think I'd be in your camp. I don't think we're going to see that. I think we've seen over the last little bit, based on the applications I've seen, maybe some modest corrections in terms of pricing, a rebalancing of expectations. My belief is that I think the Halifax market overall shows some strong signs and is attractive to many buyers. So I think we're looking forward is probably more of a stable market based on what we've seen compared to like COVID, which was a little bit more realistic.
Oh, that was crazy. Yeah. But I don't see many delinquencies. I mean, I look at all Nova Scotia every day. That's what I do. And, you expect it. That's what, people were saying, but it's just not happening here.
No, I would agree with you. I would say that not to make light of individuals that might be facing hard times. But I would say historically, the bank's delinquencies would be very low. And Halifax would be one of the markets that we would see some of the lowest delinquencies in Atlantic Canada overall, but in particular Halifax as well, that we see very low delinquencies in this market.
So I'm going to ask a question about that. So when I do my, reading in the morning on all Nova Scotia, why is it that you have you don't see many delinquencies here locally, but you do see them, let's say, on the outskirts of Halifax, like Cape Breton areas, and so what's the difference?
I think it probably speaks to the economy in Halifax. It's a little bit more diversified than some of the rural markets. Halifax, you have a good service sector. You have federal government, provincial government head offices, financial sector. So it's a bit more balanced in terms of like the employment, I would say, than some of the rural markets. You might see some more cyclical, seasonal, that are more impacted by changes in the economy, I think.
So one of the things that I see impacting buyers is the lack of inventory that's coming to the market. Is that because, are you getting more refinancing, let's say, from people who've been in their house more than 5 years? Like, what are you hearing the reasons why they're staying?
I think that's really it. Like you hit the nail on the head, is they've been looking, they can't find what they want, and they're starting to shift their focus to say, you know what, maybe we should stay here. So you're right, we are seeing a lot more refinance applications with terms coming up for maturity. This year and next year is a big year for maturities. So I think we're seeing a lot more clients saying, look, you know what, I think I'll stay where I'm at, but I'll do this renovation and add $50,000, $100,000 to do the addition or do the landscape and what it might be, and staying where they're at.
Are you seeing that a lot in the baby boomer demographic who are coming in, they're refinancing?
Yeah, there's definitely a little bit of that. I think it's twofold with the baby boomers. I think that some of them are saying, look, you know what, I'm going to do the renovation so I can stay in my home. Main level living, maybe it's changing the master bedroom to the main floor. And then there's the other segment of the baby boomers saying, look, you know what, I get to realize some of the best gains in the real estate market. I'm going to move out of this market, which maybe opens some doors for some first-time home buyers in those areas.
So if I were, talking about first-time home buyers, and there's been a lot of great initiatives that have come up, for first-time home buyers lately, what advice are you giving to first-time home buyers, to navigate the whole process?
Yeah. So, I mean, first and foremost, I always tell first-time home buyers, or ask first-time home buyers, are you dealing with a realtor? Deal with a realtor. And then number two, get pre-approved. Those are the two big things I would suggest. And I'd also encourage most first-time home buyers in your pre-approval process, even though you don't want to maybe go to the max, what is your max? You never know when that perfect home comes up and you need to make that competitive offer. It's going to position you better than the next person. And then finally, I would say, ask about those new programs that you're sort of mentioning. The federal government has finally, in my opinion, come out with some initiatives to make housing a little bit more affordable for all first-home home buyers.
Yeah, and so what would you say the first-time home buyer on average is purchasing here? Like, what are you seeing with your clients? Like, what are they going for?
Well, in terms of price range, I mean, gosh, in the city of Halifax, really hard to find anything below 500,000.
Yeah.
But I would say that's sort of the range. That's 5 to 6. If you can get 5 to 6, that's a bit of a sweet spot from what I'm kind of seeing. And then there's another group that's looking a little bit outside of the city. 30-minute drive outside of the city, that's trying to get that price point down, but they can deal with that's a little extra drive versus being right in the core area of the city.
So let's talk about the stress test. I mean, I guess a good thing that it did come in when it did.
Yep.
Do you think it's still relevant within our market right now?
Great question. I would say yes, I think it is still relevant. If you asked me during the peak of interest rates, I might have had a little bit of a different answer when we were stress testing clients closer to an 8% range. Just seems sort of unrealistic. When is the last time we ever saw rates at 8%? But I do think it's relevant and has been relevant. I think it's been a bit of a saving grace when we saw rates in the COVID era of in the 1% range, 1-2%. I think clients may be thankful now that we did stress test them to 5.25.
Well, that's why I don't think we're going to see the delinquencies.
Yeah.
Because of that.
Yeah, I think that's one reason. And then twofold is every client then that's up for maturity has the ability to renegotiate. Maybe they have enough equity to refinance, maybe consolidate some debt, re-extend the amortization back out if they want to make it a little bit more affordable. So that's another reason why I think the delinquency rates won't be a hot topic for us on a go-forward basis. I think the stress test is relevant still. But I hopefully, I don't think there are, I don't think there'll be any more changes to it.
So are you seeing any buyers coming in right now with maybe more creative solutions to, to afford a house? Like how has the buyer changed, let's say since, for the past 10 years, what are you seeing buyers doing differently to afford homes?
I would say one thing that we're seeing a little bit more frequently is the bank mom and dad stepping in and helping out. I think on average, probably I see a few more financial gifts for down payment. So I'm seeing a little bit of that, or maybe to help consolidate some debts to make it a little bit more affordable.
Are you seeing, let's say, a couple of different people will come to you, like friends coming together to buy houses, or? Yeah.
Not often, I would say. The odd time I have when it's been, like, I did have a set of clients that were friends, they bought a house, and it was a renovation, purchase plus, and one of the applicants was actually going to live in it, and the other unit was going to be rented. And so it was a bit of more of a long-term play. Say, hey, look, for now, you're going to owner-occupied, but it's a way for us to start to accumulate and grow a portfolio as sort of a business venture or business strategy. Other than that, I don't see it happening too often, like friends going and buying together.
But wouldn't that make sense?
It would, yeah. On paper, yes, for sure it would. Helping the debt servicing. My biggest recommendation to clients doing that, just make sure you know who you're buying with, what they're all about, and maybe you want to have some documentation to say, look, here's our out strategy if we ever want to separate the arrangement.
I think that would be probably how do I get out?
Talk to a lawyer. Yeah.
Yeah.
Exactly. Yeah.
So what's the 5-year fixed rate that Bank of Montreal is offering now?
So currently the 5-year fixed obviously depends if it's an insured mortgage or a non-insured, but let's say for first-time home buyer that's going in and buying a home, an insured mortgage, you're probably looking somewhere in the mid-5 range, a little bit below that. So I guess you could say somewhere it's ranging, 4.3, 4.5 in that sort of ballpark range.
Yep. Yeah. So the Bank of Canada, they have like a bunch of announcements to come out again this year.
Yep.
Where do you see us headed?
So my opinion is, I can tell you what my opinion is, and then I can tell you what some of the bank's forecasting is. The bank's forecasting is that for the rest of the year that we're going to see another about 100 basis points in cuts by the Bank of Canada. So which is good news, I think.
Yeah.
I've seen some other projections by other financial institutions that's a little bit more conservative. I think I read in the news yesterday or today that Bank of Nova Scotia's projection was about 50 basis points. I think it's right there. I think if it's on 100, it might be 75 basis points cuts in terms of rates. The interesting thing is going to be what does that do to fixed rates? Because fixed rates don't always follow what the Bank of Canada does. They follow a bit more the bond market, and the bond markets are kind of been bouncing around a little bit lately. So it'll be interesting to see.
When you are consulting with your client, Are you saying, hey, you should do a 3-year fixed, a 5-year, or an open mortgage?
So what I tell clients, I often tell, I'll give them also the info. I'll often say, if I was in your shoes, this is what I would do. That doesn't mean it's right. If I were to go fixed today, I'd likely go with a 3-year fixed. Number one is the pricing actually is a little bit more aggressive on the 3-year than the 5. Number two is I just don't know if rates stay at this range for the full 5 years. So why lock in for the full 5? I think the other option that I would weigh out if I didn't go fixed would be to go variable, a 5-year closed term. And I think this year's maybe the resurgence of the variable rate.
I think so too.
Yeah. And like I said, the 100 basis points and cuts, if we see that, I think we'll see some relief for borrowers. And the one nice feature that I know Bank of Montreal has, I'm sure other institutions do too, is that if you are on that variable rate, you can lock it into a fixed rate at any point in time during the term for a term that's equal or greater to what you've left. Hard to time the market, but if we see fixed rates come down and you're a year into your term, like, look, you know what, this looks real good. I'm seeing rates sub 4. I can lock into that point. That's probably what I would do.
So I believe our market was good when our rates were around, 3 point.
Yeah.
Do you think having our rates there will spur the market?
I do. I think that every buyer, every group of buyers has that magic number, and that's that trigger point that gets them off the fence. I think we saw it in the peak rates of COVID was sort of sub 5. People started to move again, and I think now it's the sub 4. And I think
I think it needs to be. It's not just about pricing, the price of houses. I think it is the mortgage rate. I think it needs to come down.
I think so. Obviously, I think we both would like to see it come down. If I'm a betting person, I think we do maybe see it come down sub 4. I do think the fixed rates are going to be a little bit more stubborn than some of the variable rates that are going to happen. I think we've kind of bottomed out a little bit, and we're in a trading range in the mid 4s, and the next maybe move down might be sub 4 into the mid 3s. I don't think we see below that again, at least not in this near future. Yeah.
No, but it'd be nice to see that again.
But on the flip side to your point is, though, you see those real low rates, and that spurs like the activity in the market, and that was maybe, who knows, more crazy bidding wars. I don't know. Hard to know. Which I don't know if anybody wins out in those crazy bidding wars or not, but
the seller wins for sure.
The seller always wins, but certainly causes a lot of frustration for the buyer. Yeah.
Oh, absolutely. Yeah. If I were to get back to first-time home buyers again, what mistakes do you see them making? Like that you would say, hey, we can't do that.
Well, I would say a common mistake might be not factoring some of the costs of the transaction. Getting a little bit sticker shock on some of the transactional costs. And who knows, that could have maybe due to a poor conversation they may have had, but I've certainly seen it happen a fair bit.
So talk to me about that. Like what type of transactional costs?
Oh, it could be something as simple. Yeah, it could be something, I didn't realize the deed transfer tax was that much. I didn't realize my legal fee was that much. I didn't realize there's a property tax adjustment. All those little things that just add up. And it could be just moving in is expensive. Hookups are expensive, whether it's cable or internet or whatever it might be, or furniture. So just underestimating some of those costs would probably be a common one. And feeding into that, like I mentioned before, getting pre-approved up front for your max. Again, it helps to be equipped with that max purchase price.
But again, you don't have to go for your max.
No, absolutely. And I don't encourage clients to necessarily do that, but to know that the bank is willing to approve you up front for that, because you never know, that perfect home, that perfect neighborhood comes up. I think the clients on average will want to buy that if they're approved for it.
Purchase plus home improvements. And, you've had some companies come into the market where they're offering a lot more money to help renovate your home to add to your mortgage.
Yeah.
What's the standard now for BMO, let's say based on a $500,000 house?
Yep. So the answer to that, technically, we don't really have a max per se. Bank of Montreal has a good program for purchase plus improvements where once it gets above a certain amount, we simply treat it more like a construction type mortgage. So I've had clients buy a $500,000 home and do close to $500,000 in renovations. And
really? Yeah. I didn't know that about the Bank of Montreal.
Now, most first-time home buyers, they're probably not falling in that bucket.
No, of course not.
But we technically don't have a max. How we would process and adjudicate that file and what we look for might be a little bit different than a client doing a smaller renovation, but we technically do not have a max.
Never knew that.
Yeah. And that's a good, and funny you say that, because a lot of time when I talk to a realtor or talk to a client, like, I never knew that. I talked to somebody here and said, no, there's absolutely no way you can do that. Now the client has to demonstrate they can qualify for that.
Of course,
which
yeah,
goes
yeah,
without
that
saying.
makes sense, yeah.
Yeah, but and we can do those as insured mortgages too. So for example, like a 10% down purchase plus improvements, yes, the client can add $100,000 or a couple $100,000 to the mortgage, provided they can qualify for it. Yep.
I never knew that.
Yeah.
And I know BMO used to have a really great military rate, because the season is coming up again.
Yeah.
So talk to me about the military rates.
Yeah, so Bank of Montreal has had a long-standing partnership with what's called the Canadian Defence Community. The Canadian Defence Community includes Navy, Air Force, so D&D, civilian and enlisted, retirees, RCMP, and Coast Guard. So it's pretty broad.
Okay.
So all those clients that are under that program receive preferred rates from Bank of Montreal, which are usually very aggressive, I would say. Technically lower than what I can go out and offer, like an ordinary client, for lack of better words, because of that program that the bank has. One of the big features on that program, particularly for D&D and RCMP, comes with the relocation. So oftentimes D&D are relocated every so many years. Bank of Montreal will waive any penalties for the mortgage if they cannot port the mortgage or they're not buying again. We will waive the penalties. And so we put that in the contract, where some lenders say, yeah, we'll do the same thing, but they don't necessarily have it in writing. It's more of like, yeah, what's case by case one of. It's written in our contract. And so that's one of the big features that clients receive under that program. On top of the mortgage, they receive preferred banking rates, free banking, and preferred rates and other, like line of credits and other banking products as well.
I didn't know it was all that. I didn't know the Coast Guard was included as well.
Yeah, it's fantastic. It's a great program, and the bank's done a better job and done a actually really good job the last number of years in promoting it, being engaged with the entire defense community. So it's been growing year over year. Yeah,
that's great.
Yeah.
Interesting. I'm dealing with a client now. Newfoundlander.
Okay.
Of course, gotta prop the Newfies up.
Absolutely.
So from Canada, living in Dubai, wants to buy a property over here, so a non-resident mortgage.
Yep.
Do you guys do those?
We do. Yeah.
So what's the difficulty with that, like with the compliance?
So oftentimes the communication could be one of the things. It's communicating with the client, and if they're not here, that can be one of the compliance things. There might be certain things that they have to sign for in person.
Okay.
Or apply for in person with Bank of Montreal for the mortgage. So that could be one thing that, from a compliance standpoint, I'll always look for clients such as that. Is there a way to treat it as what we call like a regular mortgage, not as a non-resident file? Obviously easier if they're a Canadian citizen to try to do that. So I'll explore those avenues first. If there's not, and they have to go into the non-resident program, then we'll run them through our program. Again, the pricing is a little bit different on that. Some of the loan-to-value ratios are a little bit different for a non-resident client than they are for a regular client.
So would I have to put down more money for deposit?
Yeah.
Up to 35%, or?
Yeah, exactly. Sometimes up to 40%, depending on the loan, depending on the purchase price and things like that. But like I said, I always look for an opportunity to treat it as that sort of regular client for a Canadian citizen.
Interesting, yeah, because this was my first time to deal with it, because I don't usually do a lot of buys, it's mostly listings.
Yeah.
And anyway, so you always learn something new. It's so funny, I was watching something on TV last night. You're always a rookie.
Yeah.
Because I've been doing this going on 15 years.
Yeah.
Like, how long have you been in the industry? Probably just as long or longer.
Yeah. So I've been Bank Montreal since 2006, so we're close to 18-ish years. And prior to Bank
Montreal, were you like 10?
Yes. Yes. Yeah. And prior to Bank Montreal, I was in the mortgage broking business. I partnered up with another individual when I came into university. So 2002, 2006, I was in the mortgage broking business. So I just took a liking to it right away. I don't know why. My last work term was at an underwriting department at one of the banks, and I just really loved it.
Nice.
Yeah.
So if you had a crystal ball,
Yep.
Where do you see our market in the next 3 years? Similar, say, the course?
I think it's stable. And I know that's a really boring answer, but I think it's stable. I think Halifax is a great city. I think it appeals to a lot of out-of-province buyers. And I think that trend continues with a lot of buyers to wanting to move to Nova Scotia. So I think, no, we're not going to see that COVID growth, in which I'm okay with. But I do think we're going to see that just sort of steady Eddie growth, steady as we go over the next few years.
Awesome. Well,
Yeah.
Andrew, you're very kind to come out and see me today. I know you're a busy man. And hopefully we can get together again in February when we're going to sit down and do this.
Yeah, absolutely. I'd love to come back.
Perfect.
All
Thank
right,
you.
Thank you.